Tim, take us through today's very volatile session.
Thanks, Junfeng. We did see stocks regain some ground initially. They ended the morning session in positive territory on the Shanghai Composite Index, but things did go downhill quite sharply in the afternoon when the Composite Index dipped below 3,200 points a little after 2 o'clock. It did recover from those lows to close relatively flat, as you've already said. Sector-wise, we saw some gains from steelmakers on the back of ideas that the state team is going to be reinvesting in a lot of these blue chip stocks. Anyang Iron and Steel and Fushun Special Steel both gained 10%, and Bao Steel was up around 3.4%. It was a similar story for banks and insurers as well. China Life, you've already talked about. Bank of Communications gained around 1.5%. But while these blue chips did reasonably well, small caps did suffer. We saw healthcare and tech stocks being abandoned in some respects. Software maker Newsoft fell more than 6%, and Joint Care Pharmaceuticals slipped around 4.5%.
Tim, the regulator and the central bank have been keen to try and calm investors after stock falls on Monday. What have we heard from them today?
Well, the PBOC surprised most people with a 130 billion yuan cash injection into the markets. That has eased some of the liquidity fears that investors had yesterday. That was done via 7-day reverse bond repurchase agreements. And the CSRC also held a press conference before the start of trade this morning, saying that the regulator will continuously try and improve the circuit breaker mechanism. And it did stress, though, that it did help calm the markets yesterday and protected investor interests during the falls that we saw. But because it is a new system here in China, it is going to take investors a little while to get used to the new rules. Regarding the imminent expiration date of the share sale ban for major investors, the CSRC has also said that it's looking at new rules to regulate share sales by those shareholders. And it would also consider mandating disclosures and restricting the proportion of shares that they can sell during a given period of time. So there are a few changes there that have been announced and proposed that have helped ease investor sentiment a bit today.
After yesterday's fall, some companies have been saying they will continue with a sale ban on major shareholders even after official 6-month ban expires on Friday. And what more can you tell us? How reassuring is this to retail investors?
Well, some of these companies are hoping that it will be quite reassuring and at least protect their stock prices. The first that we heard come out and say this was auto parts maker Zhejiang Century Huatong, which came out late yesterday and said that its major shareholder will be hanging on to its stake beyond Friday, which is the expiry date for the share sale ban. The firm says that its major shareholder wants to maintain price stability for the company and also protect the interests of smaller investors out there. Since that announcement was made, at least 9 others have come out to say that their major shareholders will also guarantee holding on to those stakes for between 6 and 12 months. Much of the tension that we saw behind yesterday's falls has been put down to anxiety over the possible huge sell-off that we could see on Friday when the ban ends. There's been talk on the markets that lifting the ban will free up more than 1 trillion yuan of stock for sale, and that's prompted some fears of a market rout. But the regulators tried to ease those fears, saying that they're reasonably unfounded, as most major investors won't need to sell or reduce their stakes when the ban ends.